Hello traders, you're welcome back to the Forex Geek channel. If you're new here, don't forget to hit that subscribe button so you never miss a new strategy or trading tip. Meanwhile, in this video, we are going to be discussing a strategy that can be beneficial for traders of all experience levels, okay? And the strategy that we're going to be discussing is the MTF Stochastic Strategy. All right, we're going to be discussing the MTF Stochastic Strategy and how it can help you to make more informed, confident trading decisions. All right, whether you are just starting out or you are a seasoned trader, this strategy is going to bring more clarity to your trades. Okay, so let us get right into it. Now, what exactly is the MTF Stochastic Strategy? Well, MTF stands for multiple time frames. And when combined with the stochastic oscillator, it is a tool that can help you to spot trends with greater accuracy. All right. So instead of looking at one time frame, you use several time frames to confirm the direction of the trend. Okay. Now, this can help you to filter out false signals, reduce market noise, and give you a clearer picture of what is really happening in the market. So let us just break it down a little bit more. I'm going to add the stochastic oscillator to the chart right away so that we can understand it better. All right. You can see that the stochastic oscillator moves between 0 and 100. With values above 80 indicating overbought conditions and values below 20 showing oversold conditions. So by itself, the stochastic can give you signals of potential reversals or continuations based on where the price is in relation to recent price action. However, we can take this up a notch by adding multiple time frames to the mix. Okay, so here's how the MTF stochastic strategy actually works. Imagine that, let's go to the 15 minutes time frame real quick. All right, so now on the 15 minutes chart, the stochastic might be giving you a signal. For example, here now, the stochastic is giving us a sell signal on the USD JPY currency pair. Okay, now this is an overbought condition on the stochastics, suggesting that we might be seeing a bearish reversal soon. But we don't want to act on that alone. Okay, what if the 1 hour chart is saying something different? Okay, for example, now on the 1 hour chart, in as much as the stochastic oscillator has entered the overbought territory, it has not yet crossed below the 80. And when we have a strong buy trend, you might literally have the stochastic in overbought condition for a lengthy period of time. So before you go ahead to sell, it's ideal if you wait for a confirmation by seeing the stochastic oscillator dropping below the 80 level before you go ahead to sell. So now there is no confirmation yet that this sell is going to prevail. Instead, what we can see are consecutive buy candles. So who is to say that the buy candles are not going to continue going upwards, right? So ideally we ought to wait for a confirmation of a sell on the 1 hour. Then we can now come back to the 15 minutes and look for precise entry points. Okay, so in a situation whereby you get a signal to sell on the 15 minutes and perhaps on the 1 hour chart you are still seeing a buy signal, then you have to wait for the signals to align before you enter a trade. This context from higher time frame helps to confirm the signal from the 15 minutes. All right, so in essence, we are using the higher time frames to filter out noise and confirm the strength of the trend that we are seeing on the lower time frame. Now let's make this even more practical. Okay, now this is the USD JPY pair, right? Just picture this. You are trading the USD JPY pair on the 15-minute chart, and your stochastic oscillator is showing. Let's just look for another example. Let's look for another example. All right, okay, let's just use this example around here. I'm just going to place this vertical line so that I can refer to that in the higher time frame. All right, so now you are trading on the 15-minute chart, and your stochastic oscillator is showing oversold conditions, right? So you might be thinking about entering a buy trade, but before you hit that button, you look at the 1 hour chart, and you can see that the 1 hour chart is it's still showing around this point, right? Around this point, the 1 hour chart was still showing a sell trend. That is the reason why I placed this vertical line, so we can refer to that. Okay, so you can see that around that same point, you can see that the 1 hour chart was still showing a sell trend. All right, so this is not the best time to enter a trade. Okay, in this situation, it is not the best time to enter a trade. So let's just look for another example. Here we can see that the 1 hour. Okay, let's just look at the 1 hour chart. Here was giving us a signal for, okay, we had a signal for a buy. All right, now let's go to the 15-minute chart. Right, let's go to the 15-minute chart and see what we can find there. Okay, I think I just need to confirm the date. Yeah, I need to confirm the date. This was just 16th January. Right, okay, here we go. So around the same time where we got a buy signal from the 1 hour chart, we can see that we're also getting a buy signal from the 15-minute chart. So in this scenario, this was a good time to enter a buy because the signal from the 15-minute chart aligned with that of the 1 hour chart. And you can see that shortly afterward, we actually had a buy trade. All right, you can see how the price rallied. Okay, went all the way up to this resistance. Okay, so now here's a step-by-step process for applying the MTF stochastic strategy in your trading. First, you'll want to set up the stochastic oscillator on all the time frames that you are looking at. The standard settings for the stochastic oscillator are 1433, but you can actually decide to tweak them depending on 533. Yeah, you can see that I am resetting the settings. You can use the default settings. All right, the default settings for the stochastic oscillator. All right, and then after you have done that, you're going to set it up on the time frames that you are working on. Okay, at least 2 time frames. Okay, let's say 15 minutes and 1 hour. And then next, you check the stochastic on the lower time frame to see if it's showing overbought or oversold conditions. After that, you move to the higher time frame to confirm the trend direction. If the higher time frames are aligned with the lower time frame signal, then you have the higher probability of a successful trade. But why is this strategy effective, especially for traders of all levels? Well, it's simple. By using multiple time frames, you are getting a much clearer understanding of the market's overall direction. For new traders, it's especially helpful because it can reduce the number of false signals you are exposed to, right? So if you only look at one time frame, you might think the market is going in one direction, but once you add higher time frames into the mix, it becomes obvious whether you are in line with a bigger trend or not. For more experienced traders, this strategy helps to fine-tune entries and exits. The stochastic oscillator can help you pinpoint entry points, while this multiple time frame approach ensures you are trading with the trend and not against it. Okay, now let's talk about some tips to make this strategy work even better for you. One thing to keep in mind is that no strategy is perfect. Okay, the MTF stochastic strategy works best when the higher time frames are in agreement with the lower time frames, but sometimes there might be slight mismatches. For example, the 1 hour chart could be bullish, right? And maybe the 15-minute chart could be showing a bearish signal or perhaps a consolidation. Okay, but in these cases, it might be better to wait for the higher time frames to align or to take a more cautious approach with your entries. Another tip is to always combine this strategy with good risk management. Okay, even with a solid strategy like this, it's important to use stop losses, take profits, and proper position sizing to protect your capital. Now, to wrap things up, the MTF stochastic strategy is a versatile strategy that can be used by traders at all levels. Whether you are a beginner looking to reduce false signals or an experienced trader wanting to fine-tune your trades, adding multiple time frames to the stochastic Oscillator will give you the edge you need. All right. Remember, it's all about aligning signals across time frames and trading with the trend. Okay. If you found this video helpful, make sure to hit that like button and subscribe to the channel for more Forex tips, strategies, and tutorials. Also, leave a comment below if you've used MTF Stochastic Strategy before, or if you have any questions. I love hearing from you guys. Thank you for watching, and I'll see you in the next video.